Hi, fellow traders. We are going into our second week in 2018. I hope everybody is off to a great start and we're tackling and doing the things that we need to do in order to move forward. But there's one thing that I wanted to make sure that I shared with you. I kind of forgot about it, but it's something that's very important. Going into 2018, we've got to hit this erase button. We've got to erase some of we got to erase those failures and those disappointments. So far in our trading career, we've had some failures. We've been knocked down, almost knocked out at times. There's been pain and disappointment. Maybe you didn't reach your goals last year. You lost too much money. Or you spent too much money with somebody who didn't really help you. Whatever the case is, we need to erase all of that bad from our memory. We have to erase our past. We don't need to hit the delete button or the escape button, but we need to hit that erase button. We don't want to delete anything, because if we we'll lose all those lessons we learned from those struggles and failures of our past experience. We need those experiences in our hard drive so that we can draw upon them and draw upon those lessons that we learn when we find ourselves in those situations again. And most likely we're going to be in those situations again. We want to erase those negative and bad feelings from our short-term memory, because as long as we let those negative feelings, those bad feelings that cause us to have low self-esteem, low confidence, those are the things we got to get rid of so we can move forward. As long as we're carrying that baggage and we have that in our short-term memory, we can't go further. We can't get any further. Bringing those bad feelings and disappointments from our previous year into the new year, we just get stuck. We get stuck in that rut, and we end up not entering trades or entering too late because we start second guessing ourselves. We can't hit the escape button, because that's the worst thing we can do. The worst thing we can do is run from our challenges. If we don't attack them head on and drive through them, we'll never develop or learn. And we have to learn and develop those skills from the mistakes that we make. So make sure going into 2018 that you eliminate or erase those bad feelings, those bad emotions, all of that stuff, so that you can tackle 2018 with a focus like you've never had in the past. This is your year to make a difference. This is it. This is your year. I put myself out there. I've dedicated myself to helping you achieve your goals. So, let's do it together. Take advantage of what we have in the community, because it's a lot more than what most people are taking advantage of. And I actually get, people get mad at me because, I'm not telling them, okay, get in at this price and get out at that price. That's not, we do that in the class. That's part of the class. When we're going over, trades, as they're happening, and we're trading in the class, or when we're doing I do one-on-one mentoring, that's when we're looking at a trade take or materialize, and I tell you, okay, this is where you enter at this price, or this price range is where you want to exit. That's where we learn. Okay, when we get in and we're putting into practice what we're learning, I want to see you, go after it. I want to see you identify the entry zone. We're going to talk about it in chat, but I don't have time to sit there and say, look, I'm getting in right here, right now. I got to get in the trade, because it's too easy to miss. So that's why the classes are free, for all the members. You got to take advantage of it, because that's the only way you're going to really learn and understand what's going on, what I'm doing. So take advantage of it. That's why it's there. All right, so let's look at my day here. Now, every stock on our watch list made a solid opening range move. Solid. Unfortunately, the first day that our stocks do that, I can't trade the open. Now, I put together a new desktop computer to see if that's going to eliminate some of the issues I was having trying to run everything with my laptop. Even though it was a state-of-the-art laptop, had the best processor, had the solid-state drive. It was state-of-the-art, but I would have problems with everything running and working with each other. So I thought I had everything set up right, but you really don't know until the market opens. When it opened, I didn't have everything set right, and I couldn't trade the open. So I waited, and I patiently waited for the secondary moves. Now, these aren't as strong or as powerful, but you can make some money at it. So if you miss the open, let's say you're rushing one day and you can't, and you get here right when the market opens, you don't want to jump in trades. Just wait, let the market work itself out, and let's take some secondary moves. You got to work a little bit harder. Sometimes you got to work. We still have to do work in this industry, but today it was just a little bit frustrating. KSS worked beautifully, just what we were looking for. Made this huge move down. Actually, I was hoping we would bounce off of this so I could get in, but we didn't. We went through it. Then we pulled back, and once we got established below this 100-day right here, I went ahead and got short because I was looking for the move down to the 200 and potentially back to the green and red line, which was yesterday's close. Well, I got in, and if I saw this trade tomorrow, I would still take it. I would still get in it. I didn't make any mistake according to my strategy and how I trade. I didn't make any mistake taking this trade. I was very patient. I probably could have gotten in a little bit sooner, but I was reading the price action, and I was just being really patient. And you can see it just didn't work. It tried. We stayed below the 100-day. We stayed below the 9. And then all of a sudden, we got this run up. So I ended up getting stopped out. This was probably the trade that did the worst. And, it didn't make sense for me to stop out here because we were still making lower lows until we had this trade, this candle, but the 9 was coming in and it crossed below the 100-day. It was all indication that this was going to continue to fade. But it didn't. It's just one of those trades that just didn't work out. So, took a $270 hit on it. That's, just the nature of the beast, I guess. Let's see. The next trade I worked was STX. Now, this one, again, I waited. I couldn't trade the open, so I waited for this move. Now, I probably could have taken it up here, but I do not short into this type of support. I just don't do it. So I got in here, once we established under it, showed some weakness, I got in, got my first cover down here around 45.76. I was looking at 75. So I got my first cover here. And then when we started to bounce and move back up, I went ahead and took it off. Now this is one of the adaptations that I made to this strategy. Normally I would just hold it until I got stopped out at break even, waiting to see if this was going to reject here or reject here. Now I'm just taking it off because I can always reset and get in just like I did here. You know, I reset, waited for the turn, got back in. This level held up all through lunch. I mean, an hour. So I went ahead and took it off. The next candle after I took it off, this thing washed. It gave me the move down that I was looking for. And of course, I'm going to jump back in and chase it. We didn't get the follow through. This was, you know, a market maker's trick, or you know, big funds trick to, you know, nail poor little people like me who's looking for this big break, and then it gets bought back up. It ended up getting stopped out, gave back some of my profits. So I only ended up with, you know, around $98 on this, but it's, you know, it's just one of those trades where we just didn't get the follow through. Now, had I not taken it off here and held out, this would have been a halfway decent trade, and I probably would have, you know, stopped out and I wouldn't have lost anything. But I can't say that I was impatient, because you can see I held it through all of this 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes, almost an hour waiting for this. You know, it was just one of those things where I just saw this popping, but it didn't happen that way. So, you know, STX was an okay trade. Again, just missed everything today, made the move. You know, pre-market here. You know, I had a plan for going long. I had a plan going short. As you can see, let's take a look. I think I've got the daily chart. I'm gonna show you what I saw on this. We all start, you know, all of my trades in the morning when we're building our watch list, it starts with the daily chart. And so we saw this big gap between, you know, this gap here. And because it had gapped up in the morning, we were trading in this gap. I was looking for it to make a run up or pull back. You know, either way, I was looking at this gap as the window we would be trading in. Now, some people, you know, say that all of this price action, once this gaps, this negates all of this price action. But, you know, we've pretty much proven that that's not the case. Okay, here's the, let me remove this one here. I don't need that one. All right, you see here, here's a solid pivot right here. This is where it bounced today, right here. And this is a pivot on the left side of this gap. So all of these, you know, stayed in play today. All of these levels, you know, had a significance in the trades today. And so that's, for me, I tend to respect these. But still, there would be profit targets. I would still expect the stock to get through these levels, but there would be profit targets. So you see here, this was the top, and then here this was the bottom. So these pivots really come into play, regardless of whether there's a gap or not. And so I was looking for the move wherever I got in, to the downside on this gap or to the upside as an ultimate target. So I really like this stock, and I was, you know, pretty, you know, enthusiastic about getting in here on this rejection, because I saw we had a nice window to trade in, but it just didn't materialize. So, but we did, get 98 bucks out of it is fine. Now, I'm only trading in 500 share lots. Yeah, I bumped it up because, we're starting this month, we're starting this year off with, I said 5 grand. I've got a little bit more in there, plus what I had what I had from last week, which, helped out a little bit. But I'm back to trading a smaller size. The last week of December, I was trading 1,000 share lots. I kind of bumped it up. Was closing out the year strong. But now we're starting and I'm trading a little bit more conservatively. We're starting the year out. It's time to grow. I don't want to dig a hole for myself. So I'm not trading scared, but I'm not as aggressive as I was at the end of December. Because I want us to, those that don't have the ability to trade, let's say 500 shares of this, you could trade 100 shares or 200 shares and still trade the strategy because you're learning the skill. This is a consistent strategy. No, we're not going to make $4,000 or $5,000 every day. That's not what this is about. Can you potentially get there doing this? Yeah. As your share size grows, so will your profit. This is a very scalable strategy. But your gains that we get, we have to understand what we're trading. How much we're risking, what size we're trading. And so it's respectable, based on, how we're trading this. So PLAY, this was the next one. Again, I was looking for trend continuation. This one I was late. I was really late getting in this one. I should have gotten in up here. This is where I first saw it. Well, really up in here. This is where I first saw the first pullback. I really could have gotten in here, but I didn't. That was my problem. This yellow line is the VWAP. This is a chart that I forgot to, update. Like I said, I was rebuilding. I had to rebuild everything when I put the new computer up. On the other ones, I fixed it. I've got the regular purple VWAP, but that's what this is if you're curious. But what I did, I waited for these rejections, and what I was looking for is this to fade into the rest of the day. Now I was looking for it to get into 43, around 43.50ish. But I did trade this. I traded it, somewhat scalping it. I got in here, took everything off here, got back in, and just kind of scaled out right in here. And I had another piece, the last piece I had on, it looked like we were starting to bounce here toward the end of the day, and we weren't going to get the sell-off I was looking for. We got a little bit of it over here, but just went ahead and covered here. As a profit stop. And this turned out to be my most profitable trade. Even though I got in it so late, it had a solid move, and it turned out to be my most profitable trade. So any one of these trades today, had we been able to catch this at the open, any one of these trades, if I would have got in these and locked into one stock, could have easily been $1,000 to $1,500 a day. Effortless. But when you get behind and you're fighting from behind, you tend to have to work a little bit harder. And that's kind of what happened to me today. So this was my biggest trade, this PLAY. And ALDR, this was another trend continuation that I was trying to catch. Now this one is a little choppier. I admit that. It was a little choppier. It was a lower price stock. But I felt we could get the pull back down to, or the sell off down to the 100-day. And that would be a decent profit. But as you can see, I waited for it to get under moving averages. I shorted it. And we recovered, hung above it for a little bit. Then we sold off again. Then we bounced up. And I just got to the point where it didn't make any sense holding this anymore. We made, relative to this bounce, we made a higher high. We seemed to make a lower low. So, we made a higher low. So I went ahead and took it off. And it seemed to be the right thing to do. Only about $70, but it didn't make sense for me to let it sit here and stop me out when I'm able to feel what's going on here, which is the reason why I got out when I did. So overall, 285.47, not bad. Not bad at all. I'll take it. I'm not going to not take it. So decent start to the week. Knowing that if I had been here for the open, this could have easily been a $1,000 to $1,500 day. I'm real, happy and real pumped and psyched about going into this week and, seeing what we can do. So that's going to do it for me today. We're going to have our day trading class tomorrow. Because it's, we had this 2-week break, what I'm going to do is we're going to look at some live trading in the simulator, in the market replay simulator, so we can kind of put everything together that we've covered so far. The reversals, we'll just do another class. That's the class that didn't get recorded. Since it's been so long, we're going to do next week, we'll just start reversals again. But I want to, this is what I'm going to be working on every day. I'm going to be working on these opening range breakdowns or breakouts, and then trend continuation trades. That easily, when we have volatility in the market, you can make $1,000 to $1,500 a day effortlessly. Once you get enough money in your account. No, you can't do it trading $1,500. But with a $5,000 account, $500 to $7,500, put it that way, between $500 and $7,500, you can use these strategies and make it. Some days like Friday or all last week, we didn't get solid moves like this. So the potential wasn't there. It was there to make some money, but it wasn't there to make the big money. So you're not going to make that every day. But the potential for the market to give you that every day will be there. It's just a matter of trusting the process and learning the skills needed to do it. Now, I know human nature wants us and gets in us and wants us to chase these easy, quick hits. It's easy to want to make, $1,000, $1,500 in 30, 45 minutes and then go out and enjoy the rest of the day. That's fine. But that volatility, it giveth and it taketh away very quickly. Sometimes they take it away quicker than it gave. So you got to be careful with that. And that's why I like these slower moving trend following trades that gives me some confirmation And so as long as 30% of these fail, only 30%, then the risk is worth it. And I feel comfortable with it. So you guys, for the members, that's our plan with the day trading class. Tomorrow we're going to cover these. We're going to look at some examples, trade some, and then we'll start knocking the reversals out on the next week. All right, so you guys take it easy. Have a great evening, a great night, and I will see you bright and early in the morning in chat.